Visa Prepaid Classic and MasterCard Consumer Prepaid for individuals. Business Prepaid for MSEs and SMEs. Corporate Prepaid Card for government agencies and corporate entities. Everybody can use a GCB prepaid card. GCB customers, non-GCB customers, G-Money Wallet users. Make life a lot easier. Use a GCB prepaid card and enjoy loads of benefits. 24/7 access to funds, advanced security features, POS and e-commerce transactions and payments. Withdraw funds from any MasterCard and Visa card accepted ATM terminal. The ability to manage cards on your own and lots more. To apply for a GCB prepaid card, you have options. 1. Visit any GCB debit card to see.
Yenya did this way. Sign o card nechi. Nenia dance say wow dear.
Tai show account statement na transaction boni bi ekoso a wohunu.
File debit and now prepaid card hun sem sie wo pin ne ye won ho awo dear and control bia. And fa pin back home my debit and now
block your card on the Saira and Nancy area. Use the GCB mobile app and our prepaid portal fire. Now reporting on them.
What shopping online use GCB virtual and our prepaid card. Nemo who buy.
In your obefro and now be send you message I trust free GCB. Now baby sawa consent pin verification.
Say GCB befre wa a number we pay 0302 634 922.
One so bet me afraid GCB customer experience 0800 422 422.
When you name come on social media handle at GCB Bank PLC and now WhatsApp yen 02.
Smooth, safe, and secure. Chalet, tap the app. Open a GCB instant account to experience the recoded vibe. GCB mobile app. Upgrade your style. GCB Bank. Use it to pay all bills and enjoy the convenience.
By more than 100%. Raise corporate bonds because it gives you and affords you patient capital that allows your business to grow. My message to all companies is try and reach out, improve on your corporate governance and raise more funding to be able to drive the growth that keeps your business going.
Heed the call to benefit also from the Ghana Stock Exchange. Join us to
and the team to take us through the presentation. So over to you, boss.
Good morning, everybody. I see some of my colleagues. Maybe we should have this more often. I see some colleagues I've been looking for in the bank, and I come and find them here. But they know themselves, so I will not say too much. But Abuna, thank you for organizing this. Maybe organize it a little more. Good. The Managing Director and Executive Management of the Ghana Stock Exchange, shareholders of GCB Bank PLC, prospective investors and analysts, members of and associates of the Ghana Stock Exchange, members of the press, ladies and gentlemen, a very good and hearty morning to all of you, and welcome here. Inflation, depreciating CD and exchange rates, rise in NPLs, non-performing loans, and generally high interest rates, and last but not the least, monetary policy around the cash reserve ratio. All these things have come together to create challenge. Not deliberate, but it has created challenge for the industry and banks like GCB. You will also recall in October when we had the last facts behind the figures, GCB focused on optimizing the balance sheet of the bank whilst preserving capital. We touched on our strategy of 2021 to 2024 and how we intended to drive profitability to create value for our shareholders. Ladies and gentlemen, GCB continues to record strong and higher quality earnings, as well as improved returns to shareholders despite these challenges and uncertainties in the market, combined with intensified competition. The bank recovered strongly from the challenges we faced in 2022 and achieved an all-time high PBT of 1.54 billion for 2023, which coincided, thankfully, with our platinum anniversary milestone. And I think this is a very strong performance of the bank, particularly for banks like GCB, for large banks who are innately challenged with macroeconomic things like this. Big banks normally come with big challenges. And so to turn around and deliver this type of results in 2023, I think was outstanding. However, our capital adequacy ratio prevented us from returning a dividend to shareholders. As a systemic bank, it has been a regulatory requirement for GCB to maintain a certain minimum CAR, or capital adequacy ratio, for which we fell short following the losses we posted in 2022 as a result of the domestic debt exchange program. As of half year 2024, the reason for which we are here, our continuing strong focus on a diverse customer base and transaction banking across the business recorded a deposit growth of 21% to end the period for half year at 26.4 billion. Gross loans increased by 20% to 9.5 billion, supported by growth in our client base and deepened relationships with our existing clients, whilst maintaining focus on stringent credit underwriting standards. Pre-tax profit for half year 2024 grew to 700 million, 35% growth year on year, attributable to revenue growth, cost effectiveness, as well as strong governance, risk and control oversight across the bank in general. We have made significant progress on multiple fronts, contributing to growth in business from our existing and new customers, improvement in human capital productivity, customer experience, and sustainable profits. Ladies and gentlemen, capital. As a result of our strong financial performance in 2023, which improved our capital position or our capital adequacy ratio for the bank, we made the decision to put our capital raise on hold. This decision was approved by the board and subsequently communicated to shareholders at the bank's recent annual general meeting held in June 2024. We'll continue to build our capital through internally generated profits in 2024 and also assess our capital requirements on an ongoing basis amidst heightened uncertainties in our operating environment and regulatory developments, and ensure we maintain optimal capital levels to support our business objectives and drive long-term success and returns for shareholders. The outlook, I believe, is very optimistic. The outlook is much clearer than before. Ladies and gentlemen, we aim to achieve digital banking leadership, provide best-in-class customer experience, and dominate our chosen markets of operation. Amidst heightened uncertainties in the global and domestic operating environment and increasing competition from traditional and non-traditional financial sector players, we will continue to seek opportunities to grow and diversify our revenue, accelerate our digital transformation initiatives while effectively managing risk and controlling costs. We have implemented the right operating model, which continues to evolve, to achieve improved revenue and the right business mix through intensified focus on solutions, sales, and stronger internal collaboration. We have also prioritized transaction banking and will make the right investment in technology to entrench our leadership in digital banking, expand our client base, and deepen relationship with our existing clients. Additionally, ladies and gentlemen, our enterprise risk management and ESG program will remain central to embedding a strong culture of risk management, governance, compliance, and sustainability. The ongoing implementation of our leadership and talent development and customer experience transformation programs are critical to our future success and are receiving the appropriate board and executive management attention. We are confident about what lies ahead for our firm and have no doubt GCB Bank will continue to deliver returns to our shareholders and lead the markets in Ghana. Ladies and gentlemen, my Deputy Managing Director, Finance, will now take you through a presentation of the nitty-gritties around our financial results, connecting all the dots that led to our half-year performance, and assuring you, all things being equal, that 2024 presents opportunity for an impressive and decent performance by GCB Bank. I thank you all for the attention you have given me, and God bless us all. May I now welcome my Deputy Managing Director, Mr. Socrates Afram, Socrates, a philosopher, to take us through the half-year performance of GCB Bank. And I hope that thereafter we can have good engagement on the presentation. Thank you all. Thank you very much.
The Managing Director, Ghana Stock Exchange, executives of the exchange, executives of GCB, colleagues, shareholders who are present here, I can see a couple, friends from the brokerage firms and the media. It's good to see you, and it's always a pleasure to be here to get you to appreciate what underlies the bank's numbers as they are published. You may recall that some 3 years ago, we told you about a 4-year strategic plan that we're implementing. That plan comes to an end of this year. We've already started engagements on the new plan for the next 3 years. I'm happy to announce that so far, the results have been great. My MD gave a gist of the numbers. I will give you a lot more details, after which we'll take your questions for better clarity of the situation. So on the presentation, I'll be taking you through the macro background. I'll also take you through the performance highlights, a bit of details, and also show you what worked, what did not work so much in our favor, at the end of which I'll also show you how we've done on our strategic delivery in terms of the outcomes that have been recorded and how it has impacted the numbers. And then finally, some key takeaways that you can go away with. And then I will take your questions. So to the macro environment. Yes, 2024 has been challenged to a large extent, but not to the extent as witnessed in 2022. In terms of national output, we saw growth in the first quarter, recording 4.7% from 3.8% in the last quarter of 2023. The good thing is that this is about the highest growth we've recorded since Q4 of 2021, when we recorded 6.1% in GDP. And again, for the first time in about 5 years, we've seen industry also lead growth, propelling the national growth. In the past, it's either services or agri. But for the first time in about 5 years, we've seen industry lead the growth, growing from 1.3% in Q4 of 2023 to 1.3% in Q4 of 2023 to 6 in excess of 6 in first quarter of 2024. This growth was underpinned by the mining and quarry industry, or subsector, which witnessed growth of 12.9%. And so we believe that investment in the sector, volume, production, and then prices are the ones that led to this. When it comes to agriculture, which saw growth of 4.5% in Q4 of 2023, the growth slowed. It slowed to 4.1% in first quarter of 2024. And then when it comes to the agri sector, which also slowed, it did grow, but there was also a slowdown. Services the same. The good thing of the industrial growth is the fact that it's likely to propel other subsectors within the industrial sector. What we are looking forward to is that manufacturing will also pick up. A lot more investors will come into the system. The confidence that is being built will attract a lot more investment into the system, for which reason we should see a better growth outcome come 2024. We are sticking with the national projection by the Finance Ministry that says growth will be about 3.1. We believe with a margin of plus minus 0.4%, we are likely to achieve this target. When it comes to inflation, inflation has also been declining. Since December of 2023, inflation has been declining, but for January and March, where we saw blips, with inflation for January recording 23.5, and that of March also recording 25.8, we've seen generally inflation coming down. And so our estimation is that inflation will continue on this tangent and likely to end the year somewhere in the neighborhood of 19, plus or minus 100 basis points. On that point, we differ from the national one that says end of year inflation will be about 15%. But these are future-looking numbers, and nobody can look into the crystal ball. A lot will depend on crude oil prices on the world market. A lot will also depend upon whether we increase utility prices locally, how agri output will look like. Already, the slow growth in Q1 has been attributed to a bit of weather conditions. We are yet to see how that will pan out come end of the year. These factors are likely to impact how inflation will pan out come end of the year. Interest rates have also seen gradual decline. From 29.2% December 2023, we've seen it come at the last auction, the 91-day Treasury bill, to 24.79. Our estimate is that it's likely to end somewhere 24.4% come end of the year. And talking of interest rates, I cannot talk of that without mentioning the monetary policy rate. The monetary policy rate is still very high at 29%, and that is driving interbank rates in the neighborhood of 28%. Again, if a bank is hard-pressed and you need to resort to the central bank to borrow, you are likely to take the money from the central bank at 30%. And so these are the implications for these rates on the bank's performance, broadly for the industry and GCB Bank in particular. End of June, as reported by the central bank, money supply growth was pegged at 34.2%. Our view is that because of the monetary tightening that is ongoing with a view to curtailing inflation, come end of the year, that growth rate may moderate somewhat to about 24-25%. Exchange rates, and here I'm referring to the retail rates, we've seen significant depreciation of the CD. Depending upon which portal you look at, you see different rates. But on the retail markets, we've seen rates as at last Friday, recording the USD 15.8 cedis to $1 US. Our view is that it's likely to end somewhere about 16.3 come end of the year, or 16.1. We give ourselves a margin of 100 basis points in that process. What are the implications of this for the bank? Interest rates being high. If GDP growth is faster and better and high, it creates a lot of leverage for banks to lend. Banks are today not being too bullish on lending because the macro situation is not great. There are occasions you lend to people and you push them into non-performance. It becomes a pain. If interest rates and inflation rates are high, our interest rates are also high. And that is where portfolio quality becomes a challenge, for which reason, most often than not, you see that industry-wide NPL rates are rising. And so for a conducive atmosphere for the bank to play its part, to support the development of the nation, we need these rates to point in the positive direction. GDP growth rising, inflation coming down, interest rates coming down, just so that an exchange rate in particular, being very stable, they help for planning. They help to keep costs under control, and they help businesses to do well. And so this is the kind of environment we operated in. Our cost, you will see, is rising. You see the part that exchange rates have played. Our cost of funding also rose, and that is also owing to the high interest rates that we spoke about. So at this point, I'll move on to the performance highlights. Or better still, let me give you a bit of background about what the regulator also did. In the midst of these macro developments, the regulator also took some actions. Inflation is still very high, and Bank of Ghana has done its best to rein it in. As a result of that, they revised the cash reserve ratio for banks. Hitherto were keeping 15% of deposits mobilized as reserve with the central bank. That was increased to 25% based on a bank's loan deposit ratio. If your loan deposit ratio was below 40%, you were asked to reserve 25%. If it was between 40 and 55%, you were asked to reserve 20%. And if it was greater than 55%, you were asked to reserve the old 15%. What are the implications of this for banks? So, banks take and invest. And so when we mobilize deposits, we do borrowings. We invest these funds in various instruments, loans, government instruments, OMO instruments, and the like, interbank activities. And so if you've taken positions and immediately you are asked to reserve with immediate liquidity, what it means is that either you are able to unwind these positions to meet the reserve requirement. If they are a little longer than the immediate, chances are that you will not be able to unwind. And so you need to resort to other sources of funding. And that is where you may have to borrow, either from the interbank market from banks that have, or you may have to resort to borrowing from the central bank. And so this measure in particular for GCB Bank, because we are taking positions and this directive came immediately, first and foremost, we had to unwind all our immediate short-term investments. We had about 1.3 billion invested with the central bank. We had to unwind that. Mind you, that unwinding leads to loss of interest income because we were receiving interest income on this investment at about 28%, and suddenly you had to forgo it. Number two, because that was not enough to meet the reserve requirement, as our short-term instruments were maturing, and I'm talking of the 91-day treasury bills, we were using them to meet the reserve requirement. And so if we're receiving, say, 10 million a month from this investment, that became a lost opportunity in our bid to meet the reserve requirement. And if that was not enough, you needed to also borrow. And because every bank needed to meet the reserve requirement, there was no money on the interbank market. So we had to resort to the central bank. In that process, we were paying about 30% to meet the reserve requirement. And so these are the implications of these actions by the regulator on us. I'm not blaming the regulator. I'm telling us the truth of what has happened. Just so that we understand, when I go into details of the numbers, we can put it in the right perspective. Again, Bank of Ghana has rules regarding what we call advance payment. Most of our importers, they pay in advance to exporters on the other side, and then they have 91 days within which to bring the full documentation. Earlier, you could do advance payments up to 50,000 without documentation. But within the 91-day window, you had to bring the documentation to make up. What we observed was that most importers were not bringing the documentation. And so the regulator cracked the whip that if an importer is not bringing the documentation, no further transactions. GCB led the association to engage the central bank. The central bank moved the figure from 50,000 to 200,000. But the core matter is that documentation should tie up with the values being spoken about. That matter has not been resolved yet. And so you see that our trade income, our trade fees got impacted. And not only GCB, the industry as a whole, because we witnessed situations where importers were resorting to unorthodox channels to be able to pay exporters outside. That impacted our performance. Again, because of speculative activities and the like, the central bank was very firm at what rate all banks could buy remittances from the money transfer organizations. And so in the past, banks were competing amongst themselves. The highest bidder was always getting the FX. Bank of Ghana came in to say that everybody should buy at the Bloomberg rate. That rate is a common rate for all banks. That also had an impact on us. It puts us, or should I say, it puts all banks on a level playing field. But as usual, people try to find ways and means. And so as you are more compliant, as you want to allow your governance structures to go by what the regulator says, in some cases, it tends to impact you negatively because others may not have done the same. But it's a good thing for all of us to play on the same playing field. The good thing about the industry is that in spite of all that I've spoken about, there are still opportunities. The industry is still growing. Deposits are growing. Balance sheets are growing. Profitability is growing. So you see that year to June, industry deposits are grown by 14%. Total balance sheet size of assets are grown by 17.5%. And again, we've seen improvement in the CAR. By 2022, most banks were underwater when it came to the CAR. Today, most banks without relief have met the 13% minimum requirement by the central bank. And so that is the background to our numbers. I touched on the macro. I've spoken about what the regulator interventions were. Now I'm happy to go into the GCB specific. So as a bank, we did well. And why do I say we did well? In spite of all the things I've spoken about. We did well to the extent that year on year our profit before tax was up by 35%. What accounted for this? We had a strong growth in our balance sheet, with our deposits growing by 21%. So the things I've been telling you about as and when we come here, broadening the base, deepening the wallet share of our customers are the ones contributing to the incremental deposits that came in. Again, we've refocused our attention on sales. And so we are a lot more aggressive today than we were before when it comes to touching base with customers. And those things contributed significantly to the profit because we got so much to be able to invest. Had our deposits not grown by that quantum, we have borrowed a lot more to meet the reserve requirement I spoke about. And so you see that as I go into the details, first quarter, our performance was so strong because we had these short-term investments that were yielding the right returns for us. But in the second quarter, by April, as we did the unwinding, we saw the numbers come down somewhat. Total balance sheet keeps growing, which was fueled by the deposits I've spoken about. And our revenue year on year, also we saw 5% growth. That 5% growth was a typical growth on the back of all the reasons I've given. First quarter was a lot more bullish. The good thing is that the reserve requirement has been met. Our strategies for tackling the market in terms of deposit mobilization, using transaction banking, using our digital channels, are a lot more focused and enhanced today. And so we believe that the second half will be much, much better than the first half I'm reporting now. So the revenue base was well diversified. I'm happy to also announce that we forged some new partnerships. Those partnerships are meant to increase float when it comes to deposits and also to increase our non-funded revenue. Existing partnerships were strengthened just so that we can do a lot more when it comes to float and fee income. We've embarked upon improving our customer experience, a strategy done, training done for all the teams, with a view to making sure that the experiences customers have when they interact with us is top-notch. And so that is also helping our cause. We've remodeled 2 of our businesses, retail banking and commercial banking. The retail remodel kickstarted 1st of June, but the commercial one kickstarted 1st of January. What we've done with the commercial remodeling is to create hubs that will bring the RMs closer to the businesses and to our customers. And already we've seen that business witness deposit growth in excess of 50% year to date. And so we'll give a lot more focus going forward into that. Again, the retail, we've made clear separation between branch operations and retail sales. In the past, the two were together, and realized that we're not making enough when it came to leveraging the network to generate the needed sales activities and the revenues and deposits that came with it. That has been done effective 1st June, and already the results are encouraging. And that gives me the confidence that second half will be a lot better than we've seen in the first half. Again, our customer engagement has been enhanced. We are touching a lot more of our employees. Training, targeted trainings, sales training, customer engagement trainings, credit underwriting. Actually, we are taking a whole team, all the business people through Moody's, which is one of the best when it comes to credit underwriting in the banking industry globally. And so we are targeting these trainings to make our team a lot sharper and targeted, so that going forward, if you interact with a GCB professional, you know that, yes, the person is made of substance and not straw. So the specifics of the balance sheet, the growth, as I said, was mainly supported by customer deposits that went up by 21% relative to the industries of 14%. And so it tells you we are doing the right things. And so as we do more of this, we keep growing faster and better than the industry. Our market share will see growth naturally. We've also increased our attention when it comes to loans. And so you see that my colleague Sinak Magati has been on air. For those of us who might have seen him, various fora trying to promote retail loan sales. More of such is being done. The growth in the loans also came from corporate banking and commercial banking, especially in the energy and commerce subsectors. We've done a lot of good transactions in those spaces, and that saw the growth in the loans by 20%. You'll see that there's no growth in our investment securities. And the reasons are the ones I told you earlier about. We needed to unwind so much to be able to meet the reserve requirement, even incremental deposits in addition to borrowing to meet the reserve requirement. The good thing is that that is done and is behind us. So we are just looking ahead to do a lot better. That culminated in an expanded balance sheet. So we've built a lot of resilience into our balance sheet today. It is strong, the quality is great. It is up to us to make sure with the right risk management architecture led by my colleague, Mr. Tio Ai, the CRO, you see that our cost of risk is coming down. As the industry NPLs are rising, ours is rather coming down or stable. So these are the positives that I can speak to you about when it comes to GCB. I've spoken about this. The revenue was broad-based in terms of the total revenue. Funded net interest income, non-funded, treasury, FX, trading, fees and commissions all came in very well. What we have to do going forward is how to expand those bases. And for us, increase the wallet share of existing customers, bring on board new customers. And with that, we think we can make a lot of returns for our shareholders. Operating expenses, I've explained that it went up. It's owing to the exchange. We have a sizable amount of expenditure, especially technology-related in foreign currency. And so as the city gives way, and these expenditure items come up for renewal, your cost base increases. So some of the measures we've taken is to renegotiate as much as practicable. There are occasions we are successful, other occasions we are not. So that is what we have to contend with. Our risk is well managed today when it comes to the risk assets. And so you see that from the high of 2.1 billion in 2022, the impairment is coming down. 2023, we're at 432. Half year of 2024, impairment has come down by 70%. And that is what I meant by we are managing the risk in a much better and stronger, robust manner. So the revenue sources I indicated, they came from diversified sources, which is the bit of resilience we'll be looking for, because if your revenue is coming from one direction or one source, chances are that that source gets impacted and then you are found wanting. The good thing about our performance is that the revenue is diversified. So if this side is not doing so well, we see what the other side can bring on board. So we suffer somewhat on advance payment by way of trade fees, but we did well when it came to net interest income because of the incremental deposits we were able to mobilize and put them to good use. Some indicators. So 2022 with DDEP, our capital adequacy was way underwater. This was the trigger for management and the board to say that GCB needed capital. And so if you recall, at the AGM for the 2022 financial year, we put a proposal before the shareholders that we needed to inject additional capital into the bank. This was the reason, because our capital adequacy had fallen to 7.59 or 7.6 as you see it. Come end of 2023, we had jumped to 12.9. We're still not there, but we're getting there. So on the back of this, we met the shareholders and said, wait a moment, maybe we can do this from within. And so we put the capital raise on hold, and I'm happy to announce that as at end of June, we were above the regulatory minimum of 13%. We were at 13.8%. I'm sure there will be a question asking, your average hovered around 20% in the past. What are the plans to get to that point? Yes, we do appreciate that. If you have buffers, it gives us more leverage to be more bullish when it comes to risk-taking. But given the cost of capital today, we have the considered view that it's better we generate from within and see how that pans out before we call on shareholders. And so for now, the capital raise is on hold, but I'm happy to report we've met the minimum. The question is, how quickly can we build on the buffer to take us to the previous levels that everybody is aware GCB was familiar with? And so we are working very hard. We see come end of 2024 what the position will be, and then we can come to you and tell you in precise form what our level will be in terms of buffers we'll build on the minimum. Our cost-income ratio rose from the 2023 level, and I think I've given enough reason for why. Whilst the cost was rising somewhat faster, the revenue was not growing that bullishly, so that explains. As we have done the right investments in technology, for which reason you've seen our app that the market is talking about. Our resilience at the back end, investment in internal controls, investment in our SOC, and also the currency has also impacted somewhat. High inflation, what you are confronted with, where I sit every day is every service provider coming to you that they need to review their prices. And there are occasions you see reason in what they are saying, because inflation average has been way above 20%. So if you signed a contract 3-4 years ago, you cannot keep the prices at those levels. And so there are occasions you need to judge up, come to a reasonable point, and those things lead to cost escalation. So in the macro environment, there's nothing, even as individuals, there's nothing that we should say does not concern me. Everything concerns you. One way or the other, you get impacted. Your service provider may come to you increasing their price. And so we have to have this at the back of our minds. Our ROE out 10, it seemed to have dipped from 2023 to 2024 half year. We have, of the firm belief that come end of year, we will tail up, because I've said our estimate is that the second half will be much stronger and better than the first half. And so that is nothing to worry about. And the same applies to the ROA. Yes, so asset quality. Take your minds to the right bottom. You see that our cost of credit, or cost of risk, as we call it, is coming down. And so, yes, our NPL remains high, but you have seen that we've not increased it. It's not gone up. Even in absolute terms, it's come down, when the industry NPL is rather rising. You have seen that the last published data from the central bank, half year, industry NPL was in excess of 24%. Ours is still in the neighborhood of the 20, early 20 or 19%. What has happened? The two facilities I've spoken about extensively at this floor that in the past were working against us, they've not been fully resolved. What we've succeeded in doing is that one is fully translated into CD, and the other is almost fully translated into CD. What those facilities were doing in the past was that because they were denominated in the USD, anytime the CD depreciated, our NPL went up and impairment also went up. We've gotten the promoters to agree with us to translate them into CD. And so that has become a static NPL. That is not to say we stop working with them to find permanent solution to it. We are still working with them to find options, either external parties coming on board, meaning if a new funder is interested, we'll engage that funder if it means we need to step down our priority in terms of whether the person comes in, and then we step down our priority in terms of order of pecking, and then get the projects running. The key to that is that once the projects get fully completed and they are live, you'll be awash with suitors. But the critical challenge today is everybody is afraid of the construction risk. And so the key for us is to get partners who will help us bring the projects to life into full completion. Once that is done, we are pretty confident that we can deal with the situation. That is how come I said we are happy if in the course of the engagement, a prospective funder or lender will come on board and we have to step down our rights. We are more than happy to do that because the projects are viable. But the question is, how do we get it up and running? That is where we have a challenge. And so that explains mainly about 70% of the NPL figure you see in absolute terms is accounted for by these two facilities I've spoken about in the past. And so you see that the portfolio is improving, we are not deteriorating. That's how come our cost of risk keeps coming down. Going forward, my CRO is not giving anybody any chance at all in the bank. And has the full support of the board and the MD, and that I believe strongly will come back better with a better NPL. So what are some of the things that worked in our favor? In one way or the other, I've mentioned all of them, but just to recap that, some things worked in our favor. I've mentioned the key investments we're able to do in Q1. We did make good money, and that's how come you saw that year on year, the Q1 for 2024 was a lot better than Q1 of 2023. Also, our fee income generation has been enhanced, especially from the non-funded side. That said, I must say that FX and FI trading income were negatively impacted because of illiquidity on the market. When the central bank said reserve, with all the interventions in the FX market, we saw that liquidity was a little tight on the opposite side. That also affected us. And the risk is well managed today. That was the reason why you saw the cost of risk decline. And so we'll work to keep that momentum, keep on that trajectory so that we keep the cost of risk low, and then we can return so much to the shareholders. I've mentioned the significant deposits we mobilized and also the quantum of loans we disbursed. That grew by about 20% year to date. I mentioned the retail loans. I mentioned investments that we did in the energy and then commerce sectors. Some of the things that worked against us, I've mentioned the FS illiquidity, also the advanced payment documentation challenges I've explained, and then high cost of funds borrowed, also to meet the reserve requirement. They ate away so much of our interest income. And also the upward adjustment in the CR with all these attendant issues were things that impacted the performance one way or the other. So some indicators for the stock market. I've always wondered why our price-earnings ratio is so low. TRO will tell you that investors do not believe in your prospects, they don't have confidence. But those of us within, we are pretty much confident that the prospects are very high on the horizon. I've already indicated that second half will be much better and stronger than the first half. And so God helping us, come next year or even end of the year around January, February, March, when banks begin to publish. Look out for that. And so we believe that you should bet on us because our earnings potential is very strong. It's stable and rising. We have the ability to generate, and you can see over the years that has not been hampered in any way, shape, or form. And that is the kind of expectation we have of ourselves. Added to that is all the things I've spoken about, the remodeled businesses, the sales focus, the targeted people development and all that. We believe strongly, as we are doing the right investments in technology and the digital offerings, we will make a lot more impact in that space. So believe with us, or believe in us, we will deliver superior returns to investors. And so I think the price-earnings ratio is not the right reflection of GCB. And so I leave that to analysts to interrogate. So you see, apart from price-earnings ratio, because of the recent price change, which has seen year-to-date of about 73.8, the others are either coming down or flat. So the earnings per share half year, I've explained, come end of year, will do better than 2023. That is a must. The market price per share, as of today, when I checked, is 5.91. We think there's still a lot of room for improvement, given our PE ratio. And so investors ask the relevant questions, things that you do not understand, things you are not too clear about. Feel free and ask us. We are more than happy to provide transparent responses so that you can form your judgments and take a bet on GCB Bank. Look at price to book. Until the last rally, we're at 0.32. So for the book value of 1 CD, investors were pricing us 32 pesos. I think we are undervalued. And so take a look at us. So the strategic outcomes, yes, we've been talking about sales focus, sales focus, sales focus. I'm happy to announce that that has happened, and especially with the remodeled businesses, as I spoke about. And I'm sure some of you might have come across GCB relationship managers recently that you ask yourself, this is not the GCB I knew. And so that is the new GCB you see going forward. So a lot of focus has been placed on sales, and indeed is showing results. Also transaction banking and digital offering. We are deepening the transaction banking. We are trying to get an omni-channel where customers can get a 360 view of everything they do, be it on the net, be it on your phone, USSD, mobile app, internet banking, whatever it is. If you choose to go to the branch, that is your choice. But then we want to bring convenience to our clients that they can do things on their own in a safe, secured manner. That explains why we did so much investment in our SOC, so that we don't get intruders breaking into the system to create problems. FS revenues and then non-funded revenue lines, they keep increasing because of the focus we've placed on them. And that we have said we're seeking to diversify our revenue base. In the past, you realize that funded income was the most dominant source of revenue. It is still dominant today, but the good thing is that over time, it's getting diluted, not because we are doing badly in that space, but because the non-funded side is coming up. And so we want to bring it up to the point where the non-funded income can pay for our bills. Also, the focus on people, I've mentioned that the training and then learnings we're exposing our people to, all the external exposure. If I'm not mistaken, the MD, all the ESCO members and management members have been to one renowned institution or the other. I have been to INSEAD. Some of my colleagues have been to London Business School. Others have been to Harvard. And so that tells you the kind of mindset with which we are operating. Why do we have to do that? You may say it's expensive. GCB is GCB. We don't have a subsidiary or we don't have a parent anywhere. We are competing with banks that have subsidiaries or have parents in advanced economies, exposed to all the advanced technologies. Most of the team, the local team does not have to worry about. It's brought to them to work with. Our headquarters is High Street. And so for that reason, some of these investments, we need to make them to make our people capable to compete with these kind of banks. And so we are not taking anything for granted. We are focusing on developing the people. We have a succession plan fully developed. And so we know, God forbid, if this morning I could not come to this presentation, somebody will have come to deliver the same. That is the kind of institution we are building, so that we are a lot more resilient, we are a lot more forward-looking, and it's not like one person goes and then things are giving way. Again, we've also embedded the performance management system. The days of old where people like GCB is a civil service bank, that is not the case. In fact, I have to justify my inclusion. Mr. Kofi Admarko will not give me peace of mind. And it's for good reason. If he justifies his inclusion, I justify my inclusion, you justify your inclusion. That is when the bank begins to outperform the competition. So I'm happy to announce to investors that we are doing the right things. It's just a matter of time that you see the fruits of all that we are putting in the bank. We've also enhanced customer experience. The focus, the strategy I spoke about, we've resourced the customer experience department. We've gotten all the tools they need to work with. We've recruited a lot more people. A lot of training and orientation is ongoing, just so that we put the customer first. For us, it's the customer who keeps us in the job. If the day GCB ceases to have a customer, I cannot wear my suit and tie. And so that kind of orientation is ongoing. And thankfully, all the staff members are buying into this. So it's just a matter of time that we'll see that GCB is indeed a refreshed and a modern bank that can compete with any other bank, and then we deliver the results. We are doing the technology investments that are required. Also, compliance. I'm sure you might have read that GCB has been rated as the most compliant bank. Sometimes, some of my colleagues in the competition laugh at me that people come to you, say you won't do, they came to us, we did. I said, for us, we are compliant. If the regulator says this, we will stick by it. Why? Not because we don't want the money, but we want what is sustainable. We don't want something you do tomorrow, you are also the regulator, sanctions here and there, and then it's a flash in the pan. And so we are investing in risk and compliance, internal controls. That has been done and is helping us. So I've said so much, but a few things I want you to take away. That the bank is on the right trajectory, and that we'll continue to build a resilient and robust balance sheet, underpinned by deposit mobilization. So you'll continue to see that our balance sheet will expand, and that will be underpinned by deposit mobilization for all the things I've spoken about. Again, our revenues are coming from different sources, and we'll continue to hammer on that, just so that no single event can take us off our target. And so revenue growth has been consistent across all the various lines, and we'll work harder at deepening those ones. We are also enhancing our digital and transaction banking offering. The idea is to bring convenience to the client in a safe, secured environment. As much as practicable, we want you to do things on your own if you are a customer. And so you come to the branch when it is absolutely necessary. That is the kind of thing GCB is aiming to do. People and talent will keep developing them, and where there's the need to attract one or the other from the industry, will not shy away to do that, to come and support us. I've told you that we've remodeled the retail and commercial banking business. Wait and see what the outcomes of those business remodeling bring to us. And then partnerships. Fintechs, telcos, any suitable partner we think we can work with. That will bring us float, that will bring us fees, that will bring us FX, provided it fits the regulators' rules of engagement. We are open and happy to work with said partners. And already we are doing that, and that is explaining some of the numbers we are seeing. Finally, we've rebounded from the throes of the DDEP, where our capital got depleted. Today, we are not where we used to be, but I'm happy to announce that we are above the regulated minimum. And so it's a matter of time we'll add and build to where we were. On this note, I want to say a big thank you. Take my seat and take your questions.
Mr. MC, before you move on, I think I just want to also acknowledge the presence of, we have participants online, right?
Yes. Yes.
Yes. I don't know how many, but I would like to acknowledge all those online.
Around 150 now.
Around 150. Thank you very much for making time for GCB. Also, our head of legal, Mrs. Jessie Jacinto is here. We also have here our customer experience head, Dr. Hammond. My own executive business manager is here, Kofi Osei-Sibe. The CEO of GCB Capital is here, Kofi Elewoku. Obviously, our financial controller, Mr. Tinkra. Also, we have here some of our shareholders and the association who are here strongly represented. I see them. Anywhere I see them, then I know that I have to be at my utmost best. Otherwise, they'll put me into line. But thank you for doing that job so well and being here. Thank you. I hope I have not left out anybody. If I have, please forgive me. Please, Mr. MC.
Thank you very much, Mr. Adomako and Mr. Afram for that elaborate presentation. We also want to acknowledge the presence of our licensed dealing members, broker dealers, our pension trustees, pension fund managers, the various media houses, our distinguished guests who are online, the Young Investor Network, our partners in financial literacy programs, and the investing public. Now the floor is open for questions and comments. Those of us in here, if you have a question, let's see your hand up and they will bring the microphone to you. And those of us online, you can put your questions in the chat box on our Zoom and Team links, and then it will be sent to me and I'll read them out for the GCB executives to respond. So the floor is now opened for questions. Thank you.
Don't worry, it always starts slowly, but I can tell you.
I'm sure they have a lot of questions, obviously.
We'll pay for this one. It starts slowly. Don't worry.
Okay, so maybe let me start with the questions. The world is going ESG, and every organization, government agencies, and all are driving towards ESG, because in the interest of everybody that we protect our environment and then have social interventions that will help our society. So I want to hear from you what ESG initiatives you are embarking on and how it's impacting. Thank you. Okay, so there's one more question. I'm sure we can take like 3 questions and then you respond.
Good morning, all. My name is Samson Ashong, a shareholder, General Secretary of the Shareholders Association of Ghana. Thank you for this morning presentation. I realize that the bank is now focusing on these training, capacity building. That is very excellent, especially looking at it from the point of view of the customer, so we can attract more customers. At this point, I also want to suggest or to add my voice that let us also look at the customers, training of the customers, especially when it comes to digitalization, where the customers are to use the platforms. You will realize that if they don't use it well, then there is fraud. That might even cause a negative sort of, they will leave. They will think that it is the bank that has created that. So we should also focus attention on training of the customers themselves in this direction so we can get more of them and their confidence will also be built up. My other one is that you have actually spoken about succession planning. I would also like to know what the board and management are also doing about the business continuity planning, as well as the disaster recovery plans, which are equally important. And then finally, talking about the plans, the risks. It is something that we have to, it's an ongoing thing. You know, let's not be complacent. Let us not say that we have reached where the level that we are complacent, we are happy, but we need to build more on that. Let us make sure that those who are really working in the bank, in that sector, are really motivated so that they'll be able to up their game so the bank will be able to move forward. Thank you.
Thank you, Mr. Moderator, and thank you, Mr. Shong. The first question, I think, is around ESG and what we are doing. I'll ask my Executive Director, Wholesale and Investment Banking, to touch on that a bit, and we'll take it forward.
Thank you very much, MD. ESG is at the heart of a lot of our focus as GCB Bank. What we've taken a view to how we engage our clients. At the center of it is a lot of ecosystem banking. So we've gone into various sectors of the economy where, for instance, agri, power, where we've grouped together a large number of client base, ensuring that we can bring a lot more of this base into the formal banking system. ESG is so important to us because to achieve the sustainability in growth, not only for us, but for our clients, ESG must be central to it. We've taken also the view that it's not something that we do alone. So we've joined hands with a number of systemically important ESG-focused entities to drive this whole agenda. So you've seen over the coming months and weeks, a lot of our work that we're doing, for instance, in the agri sector, driving the ESG framework to ensure that these things that we build are wholesome and they last for a long time. If you come back into our day-to-day credit system, there's a lot of ESG focus to it as well. And I'm sure our CRO would jump at the opportunity to give you a long list of ways in which we've embedded the whole social, environmental framework into the way we lend as a bank. It must be done if we are going to achieve the continuity that we want to see as a business and as a nation. Thank you, MD.
Just to let you know, it's becoming a very pertinent issue. Everybody wants to understand what your ESG proposition is as a bank. If people have to lend to you, if people have to invest in you, if people even want to work for you, people today, the world all over, are trying to understand what your ESG proposition is. It's no surprise that the Bank of Ghana and the Securities and Exchange Commission, even the Ghana Stock Exchange, are fully aligned in ensuring that ESG principles are embedded in banks. It's actually become a way of life. If you're a serious institution, then you'll have to look at ESG differently. New to the environment, particularly for those of us from this side of the world, but it's catching up very strongly, and GCB, like Sam has rightly said, takes it seriously. Our board, our management, our shareholders, our vendors, our employees are all being switched on to the reality of ESG. And like I said, it manifests properly if you only treat it as a way of life. So I hope we've addressed your issue on ESG. It's featuring everywhere in the bank. And in the coming years, you will see it more embedded in a much stronger way. To our second question from Mr. Ashong, I think you touched on a number of issues. The first was more of a suggestion as to how we train not only our staff, but also our customers. And I think that is a very relevant point you make. We'll note it down, and I think we'll drive it a little stronger through engagements, workshops, seminars, and conferences that the bank will seek to promote, specifically for our staff. We already run small clinics for our SME, our commercial banking, in local languages as well, and also in our in the normal English. But we'll continue to do so and intensify that, because if we are there because of the customer, then the customer must be carried along the journey we are embarking on. On the business continuity, disaster recovery staff, I think I will invite my able Chief Risk Officer, Mr. Theo Ayi, to elaborate a bit more on this, because a lot of work has gone in there. We are actually on the way to getting accredited, ISO, and our business continuity and all of that. So maybe I'll ask Mr. Theo Ayi, looks like me more from the skull, but he will tell this story. Theo?
Thank you very much, MD, for the opportunity to speak to this. In the hello. Thank you. So from a GCB standpoint, we take a very serious view of business continuity as an approach to managing the risks of the bank. Our philosophy underpinning how we do risk is that the whole business of banking is essentially a risk management exercise, and we are ever mindful of the potential disruptions that can come. What we have done is to work towards receiving a certification from an ISO perspective, and in less than 1 month, we will receive the certification to evidence the efforts we have put into ensuring that when disruptions do occur, we would recover within good time. And this relates to our efforts in the cybersecurity space. It also relates to our efforts in ensuring that even if there are physical events that disrupt how we do business, we'll be able to recover. So as we speak now, our head office, our building at Circle, and then the building at Derby, Liberty have all been featured in our scope in terms of our stance towards being able to recover in the event of any disruptions. And staff are regularly being trained. The weakest link in all these efforts has to do with staff and how we would respond in the event that there's a disruption, to ensure that our customers are served, to ensure that our shareholders' values is protected, and staff welfare itself is also protected. So all these are very much a central part of our approach towards risk management. Thank you very much.
Okay, thank you. Thank you, Mr. Ayi. Unless there's anybody who wants to contribute to this. You want to say something? Okay, that is fine. I think Mr. Ashong also suggested staff motivation, how to motivate staff. We have been through a very interesting last 3 years, from COVID to debt exchange program to one thing after the other. And all stakeholders have been impacted one way or the other. In fact, our staff have also been impacted. But GCB has taken a very strong position to do what it needs to do to retain good staff. Okay, we've invested a lot in our staff to retain them so that they can help us drive this difficult time to return value to our shareholders. You as shareholders do know that we've not been able to pay dividend as a result of some of the things my DMD Finance spoke about with regards to capital. And when you are the managing director of a bank and you cannot pay dividend, it's not a nice place to be. But the reality of the matter is that we had to do what we had to do to save this great bank. And we do know that all the things we are doing, even though we've not been able to pay dividend, we've invested in the bank. We've created value for shareholders. We've improved the reserves of the bank. And in the not too distant future, we hope it will be a different story. For our staff, it's been very challenging, but we have tried, even in the difficult times, to keep their motivation levels high. And we have looked at remuneration, and it's not only through cash that you motivate people. Showing good leadership, improving their skill set, providing an enabling environment for staff to work in a healthy way also goes to motivate our staff. So we are motivating staff in different ways. We do believe the good times will come sooner than later, and staff will also begin to benefit as shareholders benefit. So I'm sure my staff will be very happy to hear that there's somebody ringing a bell of motivation. MD, they will say after this, MD, did you hear? I hear, but let's keep it balanced. Thank you.
Thank you, Mr. Adobako. Please, the floor is still open for questions and comments. I think for the GNC too, it's in our interest that the listed companies get ISO certification. So GNC ourselves, we got ISO certification for business continuity and information security management, information security systems last year. So I think that it's also something that is very positive for the exchange, and I know that the listed companies also follow suit. So the floor is still open for questions, comments. Let me check. Let me also check with our people online. Okay.
Okay. Good morning. My name is Dodu Fuad, and I'm with Northern Reports. So on the exchange, Dodu Fuad. Yes, please. Northern Reports. Okay, so on the exchange, we would see that the share price of GCB has risen to a year high of 5 cedis 91 pesos from a year low price of 3 cedis 40 pesos. Aside from the general performance of the GSE, which is positive this year, what other factors does the bank think has led to the price increment in its equity? Now, the second thing is that the DMD mentioned that the 19.9% NPL half year is due to some 2 facilities. And the bank is hoping a new lender or a funder would come and take up those facilities so that the NPL would reduce. So will I then be right to say that in the short to possibly the medium term, we should expect the NPL of GCB to hover in the region of 15 to 20%? I just want to know. Thank you.
Yes, Dodu Fuad, thank you very much for your questions. With regards to share price, I will let my finance director start, and we will add a bit to it as to why GCB's share price is probably. I wish I had that crystal ball to tell you exactly why, but I do believe a number of things are happening to GCB today, and that's what's driving this. Maybe Socrates, you touch on some of them, and I will do the juju and tricks.
Thank you, MD. To narrow on a specific reasons that have led to the share price appreciation may be a little tricky to the extent that a number of factors account for share price movement. One reason I can adduce is the fact that since we announced that we are no longer raising the equity, and already the price to book was down there. I think some investors saw value in GCB to take stake in it. At some point, I think the announcement of raising capital led to a wait-and-see attitude. What happens? That we did a rights issue. If there are any leftovers, people were looking to come in on the back of that. And so as we canceled or we put the capital raise on hold, I think it's one of the reasons why we've seen this jump. Again, you will see that 2023, the performance was very strong, notwithstanding the fact that we're not meeting the regulated capital minimum. And we're not even alone. In fact, some banks, big banks with reliefs, were still hovering around our rate without reliefs. And so the 2023, the Q1 performance, I think put together, investors have seen that some of the things we've been telling them, they are bearing fruits and that we mean business. These are the immediate reasons I can adduce to the share price appreciation. But a number of factors could have been possible that I may not be able to speak to. On the question of NPL, so I didn't mean that somebody will come and buy the loan. Okay, so let's say, for argument's sake, you are doing a project that will cost 10 cedis. In that 10 cedis, GCB has contributed 40 cedis. The promoter has contributed 20 cedis. We are at 60 cedis or 6 cedis. That's 6 cedis. We need 4 cedis to complete the project. That 4 cedis, we've come to a stage that we cannot add as a bank. And so what I meant was that if somebody is happy to come on board, we'll step down our rights. So today, with the 40 cedis we've invested in, we have the right to take the security. But then if somebody came and said that, rank me above yourself, in the unlikely event that we are not able to complete the project, in terms of disposal, you pay me first before you think of your money. That is what I meant by somebody coming on board. It's not to sell to that somebody, but the additional funds needed to complete the project because the promoter is unable to come up with it. And for us, we've also hit our limit. So we need somebody to come along the way. That is what I meant. And so that said, there are other options that are being discussed. It could well be we can give a haircut and then walk away from the promoter. So all those options are still opened. So it doesn't necessarily mean that in the medium term, our NPL will continue to be high. We can't have resolution by end of year. It could be mid next year, and that will determine where it will be. But for now, that is the position. Thank you.
My apologies. I think Socrates has dealt with the issue of the NPL really well, but I just want to touch base on the share price. Lots of things have been said, but I do strongly believe that the bank has proven beyond reasonable doubt, okay, to the investor public that we are on a journey. And they are beginning to see that journey fulfill. We are stopping at the right stations. We are delivering what we promised, and it's just a matter of time. This is the best time maybe to invest in GCB. They are seeing value being created. The opportunities for GCB are huge, and the bank is poised to take advantage. The economy has gone through challenge. We will come out of this challenge and hopefully never return to some of these things again. If there's any bank that is going to be at the center of the growth of this economy, that bank is GCB Bank. And it is the right time to invest. The price is picking up. We will commit to doing the right things to protect the interest of our bank, our balance sheet, and ultimately value for our shareholders. I think the market is also responding to the leadership. The leadership in GCB is changing and will continue to change for the betterment of the bank. So generally speaking, I think GCB is moving in the right direction. There's great opportunity for Ghana. We have a lot of work to do. We have to get a job done. And in getting that job done, GCB will be a stronger and more valuable bank to Ghana. Thank you.
Once your boss speaks and speaks so profoundly, you have very little scope to add on. The key thing is this, right? So since the beginning of this year, we've repositioned two significant businesses within the bank. We've re-looked at the way we deliver retail banking as a service to all our clients. And Sina would speak to that at arm's length. And you can see that with that repositioning has come a lot of a turnaround. If you look at the growth we saw in Q1 this year was phenomenal as a bank from a deposit base, and that growth is continuing. So I would also imagine that those changes we've seen done in the commercial banking space, and then also more importantly in the retail banking, not to mention our focus on the customer, which is a third pillar of what GCB is looking to put forth. I think these and other issues raised by our MD and Socrates are the reasons for the drive in the share price.
Hello, good morning. My name is Godwin. I'm from SES Finance Group. I would want to start by saying I agree that GCB has done well when it comes to deposit position over the period under review. I just have a question. You know, looking at the number of branches that GCB is blessed with, what is the plans internally to have GCB stay at the top, you know, consistently when it comes to customer deposits in the industry? And also, my second question would be that in the presentation, there was a point where you said that investment securities didn't see any change. I would want to find out where the bank is focusing its investments, you know, going down the line. Thank you. Godwin. Yes. Thank you.
I will ask. Yeah, perfect. I will on the customer deposits. I will ask Sam, my executive director, to touch base on that, and then we'll come to the next one in investment securities.
Thank you very much, MD. And Godwin, thanks for the question. We are indeed blessed with a lot of branches across the country. And if you take your mind back to why GCB was set up, was ensure that we bring the financial services to every part of the country, ensuring that we avoid the non-inclusion. So the branches really are a significant pillar of what we deliver as a bank. A number of things we've done differently to drive the growth in the deposits since the beginning of the year is really around re-energizing or restructuring the way we deliver commercial banking. We used to have commercial banking run from one center in High Street. Today is run from 10 different centers across the country. So it's greater value closer to the customer itself to be able to turn around the engagement we've had with our customers. You see that growth also extend significantly on the retail space, and my colleague would speak to that as well. And thirdly, we spent a good part of this year building connectivity through an ecosystem play between a number of players within specific industries. So if you take the agri sector, we've built a significant level of connectivity, inviting tech companies to play a part. And we also bring our strong investment and bearing from a technology point of view to create an environment where a lot more players participate in a technology-based framework to ensure that both their payments, their collections, all the things that our clients do, a lot of their business framework is now captured from a tech point of view. So transaction banking is at the heart of what we drive, but we've taken it to a different level and now closing out specific loops If you go into the energy sector, we've closed out a significant loop with electricity sales. If you go into the agri space, we're just about to launch some significant work we're going to do in the cashew space. And those sorts of closed loop environments that we are building drives a lot of the customer deposits that we see. On the corporate banking space as well, there's a lot we are doing to support our large corporates. And as the year goes on, we will see that come to bear, especially as we go into the cocoa season of the year. Thank you.
Okay, I will ask my executive head of retail banking to also comment on the deposits, and then I'll ask my CIO. As you are aware, banking is changing significantly. Technology is now being introduced to trap the customer's value and trap payments and flows. So in the future of banking is not going to be around branches and brick and mortar. Technology, deploying technology. And my chief information officer will talk on that after Mr. Sina Kamagate has made some comments on this matter.
Okay, so thank you very much to emphasize. The number of branches we have as a bank should be looked at not just from a deposit mobilization point of view, but more importantly, from an ESG point of view. It's about financial inclusion. That is why you see today that GCB would be at places where no any other bank would be. And we do that knowing that to bring banking at the doorsteps of our customers and then Ghanaian nationals is at the heart of ESG. Now, over and above that, the way we're looking at optimizing these locations is to make sure that the services we provide to our customers who are in these locations are services that they will cherish. The reason a customer would bank with you is that you can solve their problems. They say he who solves the customer's problems get the customer's money. And so over and above the branches, today, if you go to our markets, you'll find GCB presence in there. We go there to build the capacity of these market women and more importantly, get deposit from them. We have set up camps in major markets in this country, and the essence is to win their trust and then get their deposit back. If you pick from the personal banking point of view, me and you want to be able to access our money. So the reason you keep your money with a bank is if you have solutions that can help you deliver the very services or utility that you want. And so that's how come, as a bank, we have invested heavily in our mobile banking app, and we won an award for that. Our mobile banking app is an enhanced GCB branch put in the palms of our customers. And so today, if your salary hits your account, you don't have any struggles to move the cash. You can pay for your utility. You can pay for the fees of your ward. You can pay for every service that you would withdraw money for. On top of that, we have our ATMs all over. We have about 340 ATMs. And we have our USSD. And so technically, deposit retention has been energized by the kind of significant investment we have made in our IT environment. And we'll continue to make those investments in our bid to lead in a digital way. So we are building a bank that would be premised on digitalization, where customers do not need to walk into our branches. And over and above that, we are going to see a lot of partnerships around our branches. We are thinking of how to deploy merchants and agents to deliver these services that we offer. And so there's a lot more happiness on the horizon. And I can assure you that the trajectory you have seen from this deposit growth is only the beginning, and that when we arrive, you would see that we have indeed arrived. Thank you.
Thank you, Mr. Abel Daite. Yeah. Abel is our Chief Information Officer and also looking after Chief Digital, and also holding our Chief Digital Officer role at the moment. Please.
Thank you very much, MD. So we get the message. We get the message that banking is no longer a place you go. It's something you do. And we're trying to put all that functionality in the palm of your hands and in convenient places where you don't really need to have to come to the bank to get banking services rendered to you. So Sina has also mentioned it, we've mentioned it a couple of times, that yes, we have an award-winning mobile app, but that's not the only thing we have. There are other channels that make your banking easier, convenient. Actually, we're looking for the time when we would decongest our banking halls because people find it more convenient to do their banking in their bedrooms or wherever else it is they are. So look out for the new GCB. Look out for more products that we are enhancing. Look out for more features that probably you ask yourself, so whatever happened to GCB? Well, get the message. We are becoming digital. We are transforming from the GCB bank of old to a new GCB bank that is digital in everything it does. And we hope that that would excite you, and that would also excite us in making our numbers much better than they are today. Thank you.
Okay, thank you. There's also a question on investment securities. What's the strategy? Where are we heading towards?
Thank you, MD. Okay, so Godwin, the point I made specifically was the lack of growth in the investment portfolio was due to the fact that we needed to meet the reserve requirement. So in addition to incremental deposits, we needed even to borrow in some instances to meet the reserve requirement. So we couldn't add on to the investments. But in the broader scheme of government investments, so what we seek to do, and I think every bank seeks to do the same, is to balance return and risk. At the core of that in banking is liquidity management. You know, for a bank, the day a customer comes to you and you say, go and come tomorrow for your money, then you are beginning to fall. And so when we mobilize deposits, we give some in loans, we give some in investment government, interbank, and then OMO instruments to the central bank. But what I've said before, and I will repeat here, is that these investments are used as placeholders. If there are viable private sector projects for us to invest in, that is our core. Because without that, where are going to be the jobs? Who open companies and recruit all the masses who are finishing university? So our first point of call is we want to give to the private sector. But we always look at the environment. Is it conducive for you to be very bullish on credit to the private sector? If the answer is no, then you tend to go a bit of the investments, government securities, the OMOs, and the interbank. As and when opportunities arise for you to do the private sector one, we unwind those positions to do. So to sum it, was because our growth in deposit was used to show up our reserve requirement. It doesn't mean going forward we won't do government securities. We've also learned the lessons of the DDEP, that you can also put all your eggs in one basket. Tomorrow it could be another thing. So we are balancing that risk with return. At the core of it, liquidity. So as we move forward, you see changes in that position. Thank you.
Yeah, and I just want to use this opportunity to speak to our customers, prospective customers, and the general public. We have a bad habit in Ghana. We borrow money and we don't want to pay. We have to pay. The banks should go out and collect their monies. Okay? It is as a result of this that our NPLs are rising. It's as a result of this that pricing for loans is very expensive. We should make it a habit that you go to a bank to borrow. It doesn't matter whether it's a GCB or XCB. When you borrow money, your responsibility is to pay back. And the banks must go out and collect their money. And that's what GCB is doing. Otherwise, we cannot lend. If you continue to borrow money from the bank and you don't pay back, then the banks cannot lend. So it will do all of us good. We're an emerging economy. We're a growing economy. We have huge opportunities. And banks have a role to play in making sure that liquidity is available for businesses to thrive. But as banks make money available for businesses to thrive, our customers, the general public, Please, let's pay our loans. Thank you very much.
Sorry. Yeah. Thank you very much, MD. My name is Samuel Dazi. First, I'm a shareholder of this company. Second, I'm a member of the Association of Shareholders on the Stock Market. I'm an executive member, of course. Thank you very much for this morning's delivery in relation to the half-year results of this noble company. Question number one. Shall we be expecting interim dividend? That's the first question. The second thing is that throughout this morning, you have been commenting on financials. Profit before tax, 700 million Ghana cedis. Of course, this is unaudited. What I am very much interested in is sustainability of this performance. And for this to come to fruition, we are also to consider non-financials. Two have been mentioned. I only add the third one, and that is the system of operations. You go to a branch, the system is down, wait for a while. Hold on, and other things. If the system of operations is not effective and efficient, the customer will come there, then the thought he's having, you may not know. The next time is at another place. And so therefore, whilst we are investing in the human capital, we are investing in the customer, we should as well invest in system of operations. That will give us sustainability of what we are doing. Over the years, we pray, when the year ends, December, our prayer is that the outcome, the profit should be a bit better because you are not sure. But once you are very much aware of what you have put on the ground, you are sure of what you are going to get. And so the thing I would like to comment on is the non-financials, and that is the system of operations. The customer does not have time to be waiting and things like that. And if that is done thoroughly, the customer is the one bringing in more customers to enhance the operations of the bank. Thank you very much.
Thank you very much, Mr. Dazi. Carrie, please, Diana has a question, so we wanted to add a question so that they can respond to all the questions.
Thank you, Jerry. It's just a follow-on on the digitalization program of the bank and the branches. I just wanted to find out, does it mean that soon, when there's a full rollout, we're going to see some kind of shrinking of the branches, not the staff, but the branches in terms of, because if you go full digital, you have branches across board, quite a number of them. And will we see shrinking of the branches anytime soon? Thank you.
I'm Kwabena, I'm with Data Bank. So I want to take us back to, okay. Again, now I'm with Data Bank, and I want to take it back to risk. So I think there's been mention of investment in the energy sector. Primary off-taker in that industry is ECG. ECG has a lot of problems with collection. They also mostly bill in cedis while they are invoiced in dollars. Raises a bit of concern. The industry is susceptible to political influence, contract abrogation. So I guess I want to know what the nature of the investment is and how it is protected from these shortcomings.
Okay. Oh, sorry, another one. Okay. Please go ahead.
Thank you, Mr. Chairman, for this opportunity. My name is Robert Alote. GCB has been a great bank. My grandfather was a customer of this bank. My father was a customer of this bank. I myself am a customer of this bank. And my children are customers of this bank. I believe my grandchildren will also be a customers of this bank, because of the wonderful things that we have been seeing in this bank. These days, we see that villages are becoming towns, and towns are becoming cities. If someone wanted to open a bank, or wanted GCB to open a bank in that village, we are staying to city, to town, or to city, what are the benefits or procedure that the bank has to do? Because we are trying to evangelize this great bank that if you say with GCB, you are in a perfect bank. Thank you.
Okay, thank you very much. I told you the questions will come, eh? Ah. Okay, very good. There's a question on whether we're expecting interim dividend. The honest truth, if there's anything like that, we are working very hard so that we close 2024 in a manner that enables us go to board and also declare a dividend for 2024. All things being equal, we will close the year well. However, I am unable to sit here and promise that there will be a dividend or interim dividend payment. But we are working very hard. It's in scope. We're on the right track. All things being equal, we'll end the year well. It is in our interest to pay dividend to our shareholders. It's in our interest to pay dividend to our shareholders. The share price is looking like it's recovering. We need to work hard to drive the things that led to it come up to almost 6 cities now. We need to work hard. There's a lot of work ahead of us. And we do believe that we will be able to meet our targets for 2024 so that all stakeholders will be appropriately rewarded. On how sustainable the performances and the non-financials, investments in systems, operating systems. You are right, because they're not too far back. GCB, you go to some of the branches, the systems are down and we have a lot of those challenges. But we've invested heavily in systems. We've invested heavily in systems. We have 184 branches countrywide. And there may be one or two, very few, who probably still remain challenged. But to the best of my knowledge, and from a strategic perspective, we have taken measures over the last 24 months and invested heavily in our operating systems. Our network, we have invested heavily. We used to be in the past on satellite and radio. Today, we are doing a lot more fiber, connecting all our branches. And so our uptime, we do admit, and I'll be the first to raise my hand, we have challenges with are 360 ATMs across country. Somebody asked, if you can't maintain the ATM well in this village in Agrobeto, why are you there? But we need to take development to our people. If we don't develop Ghana, who will? We must, however, make sure our ATMs are kept up 99% of the time. We invested in ATMs some 10 years ago, and the ATMs are admittably due for replacement. We are on track to doing that as well. In the next couple of years or so, you will see GCB roll out beautiful ATMs, fit-for-purpose ATMs, ATMs that look like GCB. And this is going to go across country. So we do recognize the fact that, yes, we are a bank like any other commercial bank, but we also have a responsibility to drive development in some of our areas. There are many areas in Ghana today. Doctors, nurses, teachers are there, and the only bank there is GCB. So it's a challenge, but like was said, some villages are becoming towns, some towns are becoming cities. And this is all happening because of an enabler called GCB. We are taking technology to the people. We are driving financial inclusion. And I'm sure that in the next few years, you will see that happening in many areas where we operate. But with the systems, we've invested a lot of time, we've invested a lot of money, and it's time to see that money give us the right return. But I'm happy you're looking at it. I'm happy you said that sustainability, you're delivering these numbers, you are investing in customers, you are investing in staff. You need to invest in your operating systems because we want sustainable and consistent returns. So that is well said and understood. There was also a question on, I think, digitalization of our branches. I think it's around this, and that, and branch numbers. Is that the one you wanted to talk about? Okay. So now, please. Okay.
Dan, thank you for your question. From my first response, I indicated that our branch setups are not merely a case of business, but more importantly, it comes with some ESG imperatives, and so that is not lost on us. I'm a firm believer that digitalization should not amount to financial exclusion. And so even as we look at digitalizing, we are mindful of the importance of physical branches. And you'll be surprised to know that for some of our pensioners, they look up to the pension days that they would go to the banking halls to meet with their colleagues. And that social benefit our customers derive from walking to the banking hall is not lost on us. And you should see a lot more of these branches as a questioner asked that villages are becoming towns, and some areas are becoming cities. We would take these decisions purely on cost and benefit basis, and if there is the need to relocate, as we have been doing this year, we have relocated 2 of our branches, and as we relocate, what we do is to improve the digital presence in those branches. We've done it in our Jasikan branch, where we've given them the most beautiful bank they've ever seen. We've done same around the Kisiman area, and we've merged 2 of our branches in Tamale. We do this, and we are mindful of the impact on the society, and more importantly, the benefit that all our stakeholders, shareholders, and other stakeholders would derive from it. And so we will continue doing that. More on the operations, as MD has mentioned, and I would like to add that the reason why we remodeled our retail business, one of the reasons why is to give it an operational and then a sales focus. So today, if you walk into any GCB branch, there's a clear separation of the operational activities from the sales activities. We do this, and we are mindful that our efficiency and the turnaround time is very critical, and we are clear on that, and that's why we've done that. And to add, we are making some heavy investments in IT. Today, we are the only bank in Ghana that has our security operations center, and that's a huge investment. We do this to protect our customers, because as you digitalize, you expose potentially your system and then your customers. How do you provide that comfort from a security breach point of view? And we do all this with our customers in mind, and we'll continue to make these important investments into the future. Thank you.
Yes, maybe to close out on a few other quick areas that were questioned. On the sustainability, it's at the heart of what we do. Look, we need to build, and we are building the business that will run beyond cycles. So you can see that come through in how diversified today our revenue sources are compared to the past. From a product, from a service, from a geographical reach point of view, that's quite diversified. A lot of focus on our effectiveness of our risk management, not only credit, market risk, and all the key risks that we deal with are the heart of how we're running the bank differently. Cost efficiency is also a significant thing. And we're looking at this all from a sustainability point of view. Digitalization, and Sina spoke about, and sometimes also we are building some scalable operations that we have to ensure that we do have these businesses today and then in the future. A few other quick things is how hard and fast we stick to the whole regulatory standards. We want to make sure that we are in business today, tomorrow, and then the years to come. A key thing I see Kwabna talk about a lot and emphasizing, and it's come through our conversations today, is our talent management. So that's also the key cornerstone for us. And it's all about how we build long-term value for both all our shareholders and stakeholders. But to the main issue around the question on the energy sector, and what I spoke about has to do more with the collections. So up until now, what vendors of electricity used to do is that they would go and deposit 20,000 cedis at the ECG to be able to buy some amount of quota and then go and vend. There are close to 17 different vending types equipment in Ghana. So if you want to vend in a particular area and you only have 40,000, that means you can only do two types of. What we've done with our partners is to crash the entire vendor requirements, 17 different types, to provide a uniform system that allows vendors who join our tech system to vend any of the 17 different types without putting forward one CD. So those are some of the investments we are bringing to bear. We do recognize that we couldn't do this on our own, so we partnered with tech firms who are already existing and good in that space, and to be able to deliver this to our clients. So over 4,000 vendors across the country are now rapidly onboarding to be able to vend with zero capital. So you'd see this sort of activity come through over the coming months in other areas of our business. And I'll pause for Socrates to add on.
Thank you, Sam. And Kwabna, so GCB we learn. We are a learning institution, meaning we take our lessons very well. I get the import of your question as regards energy and tomorrow, the challenges GCB had with TOR. Is that not the case? Yeah, we learn, and we take our lessons seriously. So, yes, I was referring to the spectrum of the energy sector, from OMC, BDC to distributors like ECG generators and all that. But the good thing is that the structure that we put around these credits has changed. And so in the main, it's either cash-backed, T-bill-backed, or the specific receivable that we have control over, which is the one backing the credit, because of the lessons we picked from TOR. To see, because of this increased lending to that sector, tomorrow, MPLs hitting the roof. That is not going to be the case. Thank you.
Good. I think, but just to summarize Diana's question, because she'll come and ask me again. Diana, we are not intending to close branches, and the play is not about whether to close a branch or not to close a branch. It's more to ask ourselves, what reach do we have? What channels do we have? Okay, and what do our customers want? Okay, there needs to be a balance, and then over and above that, the return. So what do the customers want? What reach do we have? And then what channels are we using to do so? It may so well be, okay, that going down the line, cash becomes something that is not very popular. Today, it's still very popular in our markets and in our way of life. But with the introduction of all kinds of products and services, payments are being done electronically, and you see the growth of electronic payments today, meaning that cash is at risk. So how do we reach our customer base? How do we reach our clients? How do we support them with payments? What channels will we use is what's going to be important. The focus is not so much on whether it's brick and mortar or not. By evolution and by business, brick and mortar will answer the questions when the time comes. But there's no intention today or strategy today to close down branches, as it were. In our rural areas, you would agree with me that, like Sam or somebody said, I think Sina said that, we have many people who physically want to go to the branch. The question to ask is, how do we get them to want to do more digital stuff? Many years ago, if we spoke about electronic payments on the phone, people would say, oh, nobody wants to do that, nobody. But today, even the very stark illiterate are using phones to make payments. So we will get there. I'm answering this so you don't catch me in the corner and beat me. There was a last question, if I do remember, coming from Mr. Alote. Yes, you want to take it?
I think
Sinad dealt to that one. Okay. All right. Thank you very much. Mr. MC, back to you.
Thank you very much, Mr. Adumaku. I think if we don't have any more questions, there's one last question from our people online, and I think it will be fair if we respond to this question. So it's specifically addressed to the head of risk, and this is from K.O. Ansa. He's asking, kindly assist us with your value at risk on your main business segments before, during, and after the DDP. I hope we can.
That's an MBA question for you. Yeah. Value at risk. Before, during, and after.
Thank you very much. This sounds like a topic for MBA dissertation. Well, given the nature of the question, I'll not be able to give you the exact values and so on. Yes, but all these are very much well under consideration in our market risk space. Just to give you assurance, yes, we did take a hit from the DDP perspective, from the perspective of earnings, liquidity, and ultimately the impact on our capital. But since then, on account of the sustainable approach we have towards business, we have recovered and we are in very good business. In terms of the actual metrics and the computations and so on, it's perhaps something, it's an opportunity for you to engage us so we can share some of the relevant details with you, because these are founded on assumptions relating to probabilities, time horizons, and depending on the horizons and the assumptions, they change. But I felt like I've been taken back to school. That's a very good question. Thank you very much.
Let me just say one small thing here. Very good question from, you said it was who?
K.O. Ansa.
K.O. Ansa. Okay, K.O. Ansa, thank you. And it will be interesting to catch up with you at some time to share ideas on what you really mean. But I must say that You know, when the debt exchange program was a new thing, it hadn't happened here before. So for us bankers and the central bank, the Ministry of Finance, everybody had to work around the clock. And every day you got to understand what you were doing better. Okay, you got to understand what the risks were. It had the tendency to also push you into some position where you did not want to take risk again. But you know, the business of banking is all about taking risk or managing risk. Okay, the business of banks are managing risk. So the debt exchange program potentially could push a lender or a bank into a situation where you virtually go into comatose. So you don't want to take any action. You don't want to do anything. But in all of that, I look at the value at risk as you or the value at stake as you put it. We all had to go back and sit down and look at our risk appetite again. Okay, we configure what type of risks we wanted to take as banks. For GCB in particular, we had been talking about preserving capital. I'm sure it was something for every other bank. And so we had to really sit down and look at what type of risk will we take, what type of instruments, how we calibrate these instruments, and what risks do these instruments present for us, and how does it feed into our balance sheet. Ultimately, it fed into our strategy as well. And so you see our strategy pre-debt exchange program changed slightly to match what the bank's risk appetite was. So looking at it from that perspective, there was a lot of value at stake, but you got to keep a balance between the type of risk you take and the rewards that you get. But all said and done, interesting question. I would like to have a cup of coffee with you to delve into some of these things. Thank you very much.
Thank you very much, Mr. Adomako.
My name is Jonathan Quifio, Mexico. Something has been worrying me for the past 3 months about the workings of GCB. Let me be frank with you. Today when I woke up, I was wondering whether I'm come to hear some good news at this meeting of today. One, I'm so glad to hear the training of the staff of GCB. Not only in Ghana, but even at abroad. Going to schools like Harvard and few others, I can say you have a management that care for people. That's one. You have a company that care for their board. So what else? Because when we were talking about the training, the good things that have been done to all those beautiful coat, nice faces, I can really understand that you are well kept up. And I want the management and the board to relate in training and obligating some of you. There's a product within Ghana Commercial Bank. We know of Momo. We know of Telecel. But you have also introduced another, what is that?
G-Money.
G-Money. But the news and the operations is coming. I don't know. Please, from this day, somebody said something. From this day, let us come up. Because people don't know, and still the tension is running down. I leave this to the management and you, the staff, to come out to do something about this operation. Thank you very much. My name is Jonathan Quifio, Mexico.
Thank you, sir.
Perhaps I'll just stay seated. Quite right.
All right, thank you. My name is Kofi L. Ewuku. This is a comment and not a question, and harking back to the price valuation matter. This is a charge to broker-dealers, the research desk, the financial news teams. It's a two-way street to address this. GCB Bank share price is trading below intrinsic value, fact. There is significant room for traders and investors, the investor community and broker-dealers to play on the price to unlock value, fact. But Mr. Adomako and his team can do their utmost and churn out the finest of numbers. If the other critical side on the flip of the same coin, i.e. these stakeholders I mentioned, the dealers, the investor community, the research desk, etc., also do not do their part with the publications, with the analysis, we will so struggle with this issue. So that's the comment I have for the colleagues on this side, including my colleague fund managers. Thank you.
Thank you very much. I think we've gone past our time and we need to end it here. I'm sure we can still continue the conversations. The executives will still be around to respond to some of the questions. But for the sake of our time, I crave your indulgence that we wrap it up and end it here. We'll now take the closing remarks from our Managing Director, Ms. Abnamwa, and then we wrap it up.
Okay. Sorry, just before Abna you come, Mr. Mexico, Uncle Mexico, thank you very much for your suggestion and your observation. Indeed, you are right. We continue to invest in our people, in our customers, and in our operations. We'll continue to do that. But more importantly, on G-Money, your observations are right. You're correct. There's a plan. We're working on it, and I'm sure that before end of the year, you should see some signs of the future of our G-Money business. Thank you so very much.
Good afternoon, everyone. I tried my best to look like the GCB team today, and I think I'm on the winning side. Bank for life. Mr. Kofi Adomako, Mr. From the rest of the executive team. GCB has colored the room gold and black today. Valued stakeholders, shareholders, our fund managers, my brokerage community, my own GSC colleagues, and of course, all the people that are joining us online, the special media, and of course, our technical group that have been here working with us. I say a big thank you to all of you for being here and for your attention and supporting GCB on this very, very important initiative where the GSC facilitates discourse between investors, potential investors, and issuers on our market. And I think GCB, since your listing on the Ghana Stock Exchange in 1996, you have been one of the companies that have been very faithful to this event. And I say ayiko to all of you for that. Let me share with you some of the exciting developments at the Ghana Stock Exchange so far this year. As at the end of July, our GSE Composite Index was up 43.56% compared to 21.80% the same time last year. So our index is up, and in West Africa so far, we are the best performer and one of the best in Africa. As at last Friday, we had gone down a little to 39%. The Financial Stock Index Same time last year was down 16.44%, and this year, as of July, is up 10.53%. But best of all is that GCB, at a share price of appreciation of 74% so far this year, you have outperformed both the composite index and our financial stock index. And investors are rewarding you for the continuous engagement that you give them. And we see that companies that continuously engage with investors use this platform get the results that they are looking for. It doesn't take away the fact that we believe that the entire market is undervalued. And so that's why we continue to work with our fund managers, our local fund managers, to participate more. We continue to work to attract international investors to continue to look at our market. And we at the Ghana Stock Exchange are not going to relent on this. In terms of value traded so far this year, as of July, on the equities market, we are up over 200% to 1.1 billion Ghana cedis as at the end of July. And market capitalization has gone up 29% to 93.3 billion Ghana cedis. On our fixed income market, next year our market is 10 years old, the Ghana fixed income market. It has, of course, been impacted significantly by DDEP. But even that, so far this year, as at the end of July, our volumes traded are up 83% to 85.3 billion, far from where we were 2022, but definitely much better than last year. What are the opportunities for markets or for players on the market so far this year? And this is where I call on GCB and other issuers to really look at our market in terms of raising capital. Since inception, our equities markets, corporates have raised about 7.4 billion Ghana cedis on it in 33 years. But on our Ghana fixed income market, corporates have raised almost 22 billion Ghana cedis in less than 10 years. It tells you the vibrancy of that market. But it also tells you that our market needs more equity capital. There are many companies, there are many projects that I'm sure in your credit teams sees the need for additional patient long-term capital. And we've all talked about how high the interest rates are today, the cost of borrowing is. And many of these projects can do well by raising equity capital. So we want to partner with you. We want to partner with your credit teams so that the companies that will do better by having a healthier mix of capital come into the public markets where we don't just provide capital, but we also promote good governance practices. So what GCB goes through here, many more of your credits or your companies, your clients, can go through more sustainable processes by being accountable on public markets, raise equity capital, and give you and other lending institutions more room to lend more to these institutions. It's what we call on all of us, the entire industry, to give investors, Mr. Mexico and all of the Shareholders Association of Ghana, more opportunities to have 100 companies, 200 companies listed on the GSE and taking advantage of the opportunities here. And that is why we've launched additional markets as well. As you know, this year we've launched the commercial paper markets. Corporates can raise 15 days to 270 days capital. And on the back of that, we've introduced ratings. There are many of your clients that will benefit from the ratings culture. And so Ghana is joining the international community very soon. Fund managers, companies, anyone seeking credit, will join what we require Ghanaian corporates that want to raise capital or debt capital on our markets by getting ratings. The SEC has licensed 2 fully. They've issued also an interim license to the CRAG Ghana, which the GSE is promoting together with other institutions. And there are other ratings companies operating in Ghana. So the market is getting ready for ratings, and we are at the forefront of pushing that. We also have the market for raising long-term debts. Yes, the current environment is showing that the cost of debt is high, but regardless of that, companies have raised almost 200 million in medium-term notes on the market so far this year. 2-year, 3-year paper, Casapreco, etc., have been on the market. Additional opportunities for us that we want to extend to you is our green bond market, our social bonds market, our gender bonds market. GCB Capital, you can be at the forefront of this. We've launched the products. We are looking for people to take advantage of that. The few corporate issuers that have come to the market this year have demonstrated capacity to borrow money at even lower rates than government treasury bills. Let's see what we can do with the green market, the sustainability segment of our market. Dinah and her team have worked very hard to launch also our ESG reporting manual. And we are working with issuers such as GCB so that your sustainability story can be packaged and told in a manner that investors can focus on and see how far you're advancing in these sustainability initiatives. Of great pride for us was about 2 weeks ago when the International Capital Markets Association announced that Ghana had become the 3rd country in Africa after South Africa and Mauritius to earn a clean opinion on the Global Master Repurchase Agreement, the repo. And the stock exchange really wants to take this opportunity to thank the Bank of Ghana, the GIFM market or the fixed income market, and all its players who have worked very hard with us to attain this very important international recognition. It's important because it helps us grow our market, provide additional opportunities, and makes sure that there are more opportunities for investors and people that need capital to transact in ways that are globally acceptable and that are in line and give risk management also in line with best risk management practices. So having that clean opinion issued on the Ghana market was a big, big thing for us, and we congratulate all partners, Bank of Ghana, the GIFM market, the legal team, and of course, the Ghana Stock Exchange, who have achieved this together. We are not relenting on what we've achieved so far this year. And that is why the team is working very hard to bring similar and new products to the market, such as securities lending and borrowing and asset-backed securities as well. We have developed the rules framework, and we are looking forward to implementing these new products next year onto the market. For my team at the GSE, I want to say thank you. It's been an eventful time hearing that GCB is going through what we painfully went through last year to get not just certified, ISO certified for one standard, but 2 standards at exactly the same time. Last year, we were certified with a very small team, all of us working back to back to back through our heads and noses and everything to achieve certification for cybersecurity as well as business continuity management systems that we've put in place. I want to say thank you. I'm so proud of us, and I know that this new certification we are coming through we will rally together again and show that we take these systems very seriously. They are part of our lives. So thank you very much again, everyone, for coming and working with all of us. Ghana Stock Exchange will meet its objective of being the foremost platform for raising patient capital and providing a safe, secure, and rewarding investment platform. Thank you.
Thank you very much, my MD. Thank you very much for the closing remarks. So, all too soon, we have come to the end of today's program. Before the closing prayer, I would like to make these announcements. So, right after the closing prayer, we'll do some interviews with the media, after which we'll take some photographs. The GCB team has requested that they want to be seated to do the interviews. So right after this, we'll do that with the media, and then we'll take some pictures. After that, we have the lunch packs and the branded packs. GCB has designed some nice branded packs for everyone who has attended this program. So we'll pick the lunch packs. So I've been hinted that we'll take the pictures first, after which we'll do the media interviews. And then from here, we'll all go to our investors' lunch to pick our packed lunch and then the branded souvenirs. So on behalf of the management of the GCB Bank PLC and the Ghana Stock Exchange, I want to thank all of you for coming, those of us who came in person and those who came online. Thank you very much for your time. And I believe that as a moderator, I conducted myself well, because Mr. Adumako is also the chair of the GNC Council. So I believe that I've conducted myself well. So thank you very much. So shall we please be upstanding whilst we take the closing prayer? So let's pray. Father, we are grateful unto you for a successful program. We started in your name and we are ending in your name. We continue to ask for your blessings and for your glory to remain over the GCB Bank, that you cause them to continue to shine and to excel in whatever they do. We also ask for your traveling mercies for everyone who made it here, that take every one of us back home safely, that when we get home safely, we shall be careful to give you praise. We thank you for everything. In Jesus' name, we have prayed with thanksgiving. Amen. Amen. Thank you all for coming. Thank you. So we'll start with the pictures. So, okay. So please, we are starting with our presenters, the executives who did the presentation. I hear the cameraman. Yes, please, you can be here. I hope this space is always tight. I'm sure all of you can fit here.
This has led to the company becoming profitable and has made consistent profits over the last 6 years. So our existence in the stock exchange has really created a